Hello traders and welcome to our weekly market outlook. My name is Timothy Carrier, your lead educator and market analyst. And today we are looking at what transpired the previous week and what we are expecting to transpire this coming week. And our key themes will be looking at the Fed rate cut signals, the tariff pressures, inflation persistence, and AI momentum, earnings momentum. So to begin with, looking at the key economic data last week, we saw the July PCE inflation, whereby the headlines we had a positive 0.2% for the month after month, which is quite in line. The core PCE stood at positive 0.3%, again, which was much in line. That is month after month or month over month. We were able to see the annual core PCE, which actually stood at 2.9%. Again, this showing some the highest figure in the last 5 months, and above again, which is slightly above the 2.0% Fed target. So we see here sticky inflation amid the tariffs. But again, no surprises because it's something that was much anticipated. But it highlighted persistent pressures, right? It was able to highlight persistent pressures. The consumer spending stood at came out plus 0.5%, which again is also in line. So when you look at the July PCE price index, basically we can be able to conclude that it was able to reinforce the Fed cautious stance, and the rate cut odds now dipping slightly to 85% for the month of September, because we are waiting the Fed to have their meeting come the month of September. And when you look at the consumer confidence also, which was data that came out last week, it was at 97.4%, which was able to beat expectations of 96.5%. And here we see a strong sentiment despite tariff concerns. Then if you look at the durable goods order, we had a positive 1.1%, which is in the X transport, which again it's a data that was able to beat expectations, and this signals manufacturing resilience. So when we look at also the existing home sales, which is a key data to look at, and actually it was a data that was able to give some bit of influence, especially last week. We saw plus 2% month over month. But again, we saw price dip amid the high rates. So overall reaction for the US data that we were able to see last week, we can say the data supported the soft landing narrative, but underscored the tariff Fed inflation risks. So we were able to see mixed market sentiments or mixed market moves. But again, for the boards, we were able to see the boards gain slightly higher. For instance, the 10-year yield was able to gain 4.23%, right? So if we look at last week market outlook in terms of different class assets, beginning by the stocks indices, looking at the summary of the performance of the stocks indices, we see the Dow Jones being able to lose 0.2% weekly last week, or this last week. And year to date, we are talking about around 7.1% in the positive side. If you look at the S&P 500, it was able to lose negative 0.1%. That was a slight loss. And year to date, it's positive 9.8%. If you look at the Nasdaq 100, we were able to see the NAS lose about negative 0.2%, and here to date, you are talking about positive 11.1%. So if you look at these major indices, basically what we are seeing, it's some bit of slight loss for the S&P 500. Of course, we are looking at it being influenced by the Friday's slump post PCE data that came out. And also on Thursday, we had some influences, which was driven by the NVIDIA earnings, all right? NVIDIA earnings. If you look at the Dow Jones, the gains were basically erased on Friday, again, due to the PCE inflation data that we were able to see. Nasdaq as well, we see some a bit of tech rotation. Nvidia being able to lose about 2%, right, despite beating its earnings expectations. So if you look at maybe probably Russell 2000, which is an index that measures small cap companies, this was the only index that in the US market that was able to at least gain positive 0.5% on the weekly. And here we are talking about the small caps being able to outperform on rate cut hopes. Okay, so also some of the key drivers for these particular indices, we saw Powell's Jackson Hole speech, which he gave on August 22nd. We saw the influence last week, but one also that influence continued the market last week as well. And this was able to boost the early week gains, especially 1.5% gain for the S&P 500. And the PCE index, price index data that came out on Friday was able to cool all that momentum. Okay, so in a broader participation in cyclicals, we can be able to see maybe probably the fear index being able to shoot slightly above 5%. Okay, and that is now to about 19%. Okay, so these are the key things that you want to really watch out, especially if you are trading the stock indices. All right. So, like I've said, the S&P 500, the Dow Jones, which was almost flat because we see slightly loss in terms of the Dow Jones, the Nasdaq also, which was able to lose. So the key drivers here is the PCE data for the S&P 500 and the Nvidia earnings. When you look at the Dow Jones, we are looking at the broadening rally. All right. When you look at the Nasdaq 100, of course, it's because of the tech companies, the pullback that we were able to see in the tech companies. Okay, so when you look at the Russell 2000, of course, you can be able to attribute the key driver being the rate sentiments for small cap companies. So also when you look at last week in terms of the dollar index, the Japanese basket, and some of the Forex currencies and commodities, you understand that we were able to see the DXY, that is the dollar index, which was able to lose about negative 0.2% weekly, and dropping all the way to about 97.75. And this weekend, post Powell, a dovish signal, because we continue to see the impact of those particular, the impact of the dovish sentiment by the Fed Chair Jerome Powell, and also. When you look at the year to date, the dollar index is so much in the downside. It has been losing the entire of this year. We are talking about almost negative 9.8% year to date. And again, the tariff uncertainties also being able to cap the gains for the dollar index. When you look at the Japanese basket, we were able to see a strong yen, which was able to strengthen slightly because we're talking about 1.52% monthly, especially on which is anchored on the Bank of Japan hint in terms of rates. And when you look at a pair like USD JPY, USD JPY was able to studying at 146, about 146. It was able to close about around 146.95%, right? So, but we see a weekend Japanese basket, right? I mean, we see with the hint of the BOJ, but again, we are seeing a weakening USD amid the safe havens flows. Okay, if you compare the USD and the Japanese basket, if you look at some of the other forex currency pairs, like for instance the Euro USD, was slightly, it was able to gain for the week about 0.5%, and this is due to Euro resilience on the ECB stability. The GBP USD was closed almost flat, right? Because again, we are seeing a sticky UK inflation. But overall, in the forex market, we are talking about volatility being up, especially as we rally towards the Fed path. So when you look at commodities, gold was able to really gain for the week. We saw gold really pushing up about 4,000, almost 4,000, almost 3,000. 450 dollars per ounce. Okay, and this is because of the safe haven demand amid volatility. And for the monthly gain, it was about positive 5.31%. Also, we are able to see Russia, which was able to reciprocate the attack of Ukraine. So they attacked Ukraine, and also this now dwindles the hope even for the talks that is ongoing, which Donald Trump is really preparing for the peace deal between Russia and Ukraine. So that makes gold to be a safe haven. So people tend to invest in assets like gold, and the reason why we can attribute the price really pushing up. So when you look at oil, that is a WTI crude oil, that is the US oil, plus 0.4% to about 64.01 dollars per barrel. And here we can attribute the supply concerns offset demand. And when you look at the Brent oil itself, standing at 67.45 dollars per ounce. So we're able to see some glad fears, especially for the oil, because of the supply concerns. Okay, so and also the maybe the geopolitical tensions, because again we know Russia is ranked highly, especially in terms of oil production. So the trends that we are seeing here is the DXY range bound about 97.7, between 97.7 to 98.60. Commodities, we are seeing some bit of a mixed sentiment. Gold up because of uncertainties. Oil pressured by the OPEC plus hikes. All right. So that's basically what you're looking at. So when maybe probably putting it in the simplest terms possible, maybe for us to be able to digest this kind of information. So what we are looking here, the dollar index, we are talking about negative 0.2% weekly change. And the key driver here is the Powell dovish tilt. Okay, that the shift we are seeing in terms of the Fed. And if you look at the USD JPY, it was able to gain about positive 0.22%. And this is because, again, of the BOJ policy int. If you look at the Euro USD, again, it was positive due to ECB stability. Gold closed really positive, gained a lot last week. It was very bullish. And here we are talking about it being a safe haven. Okay, looking at the things that are ongoing, Russia reciprocating its attacks to Ukraine, and also even the Fed dovish sentiment is weakening the dollar, and therefore we expect gold to gain in such instances. When you look at the oil, especially the WTI, we are talking about supply glut concerns. All right, and so what are we anticipating? Maybe probably this coming week, what are we anticipating? So we are going to look this in terms of the stocks indices. We are going to look at in terms of the DXY, the Japanese basket, the forex currency pairs, and the commodities. So we are looking at the week starting September 1st all the way to September 5th. So the overall sentiment that we are seeing here is more of a cautious optimistic, because you're talking about 85% odds of a 25 basis points cut for the Fed on September 17th, 18th meeting. So the focus is basically this week we are focusing more on the job data amid the softening unemployment, because you're seeing unemployment about 4.2%. So we have seasonal weaknesses because the September average for the S&P 500 about 0.4, negative 0.4 percent. Okay, So maybe probably this month again, the month of September, we might see the same seasonal tendencies, because again, seasonality in the markets, in the financial markets, it's a bit it's common. It's something that we have seen it repeat, but again, it's not really something you can anchor fully in terms of expecting how the markets are going to move. So looking at the tariff updates, it's important also to consider the tariff updates, and which is likely to add the volatility, and the growth slowing of especially the GDP, the Q2 GDP data that we were able to see to positive 3.3% revised data. Also, we are looking at a sticky inflation. Core PCE inflation data last Friday standing at 2.9%. Right. So if you look at the stock indices, the S&P 500, I'm looking at a range bound between 64,000 and 6,400, and maybe probably 6,600. We might see mild, highly weak pullback, and maybe probably a rebound if maybe probably you're going to have a soft job data come September 5th, this Friday. So rotational to small caps, we are anticipating some a bit of rotation, especially for the small caps. Maybe probably we might see maybe them slightly dipping, or such kind of sentiments. If you look at the AI infrastructure, they are very supportive, but again, we are looking at it in terms of risk, the tariff risk. All right, it's important to consider the tariff risk, because we are not yet off for the tariff. We are not yet off the hook in terms of the tariffs. So I'm going to look at it in terms of two ways for the stock indices. We might be able to see a bull case, especially if you're going to have a soft NFP data. And maybe probably S&P 500 might rise all the way to 6,600. A bearish case where we are going to have, in case we are going to have hot NFP data, therefore it means that we are going to see some bearish sentiment for the stocks indices, and maybe looking at the S&P 500, there are possibilities maybe the price can be able to shift on the downwards to about 6,200 levels. Okay, so for the DXY, mild weakening between 97 0.00 to 97.50. The Fed cut pricing pressures for the USD. It's also important because it's really pushing the dollar index on the downside. And a safe haven if volatility spikes. So if you're going to see spike in volatility, then the DXY might be more of a safe haven. Okay, so if you look at the Japanese basket, basically, especially comparing it with the USD. So here looking at the USD JPY, what you are looking at is about 145 to 148, between 145 to 148 levels. We are looking at yen strengthening, especially on the BOJ tweaks. And also, but again, on the other side, the USD resilience if tariffs hit exports. Okay, so when you're looking at some of the major forex currencies, for instance, Euro USD, we are talking about a rate of 1.1, 1.16 to 1.18. Remember, next week we are going to have, that is the next week that is beginning about September 8th. We are going to have the ECB rate decision, and we are looking at a potential rate cut for the ECB. So meaning that it might make the USD, the Euro USD pair to really maybe probably push on the upside. If you look at GBP USD, we are talking of a range between 1.34 and 1.36 level, and this is due to the sticky UK inflation. Okay, so looking at the commodities, gold, are we going up or are we going down? So we are almost seeing right now almost trading about $3,448 per ounce. So are we going to see another all-time high, maybe probably before the Fed decision in next week, but on that is September 17, 18th. So are we going to see a new, maybe probably a new all-time high? So it's something that we are looking at, but now the trading range that I'm looking at maybe next week, because we are a bit bullish for gold, what I'm looking at is the range between 3,400 and 3,500, where we have the all-time high. Maybe probably we're gonna see another all-time high, but again, Let's take what the price gives us. I don't want to predict maybe you're going to have another all-time high, but I'm looking at the range between 3,400 and $3,500 per ounce. Looking at it in terms of it right now being a safe haven. Okay, so looking at oil, I'm looking at the range between $62 per barrel to $65 per barrel. That might be the trading range for the week, with OPEC plus hikes and also the demand slowing down. If you look at the tariff boost, which could, especially if you look at the tariff boost, they could add about 0.1 to 1% to CPI, because CPI, the tariff has really been, tariffs are inflationary in nature. Okay, so we might be able maybe see these had more pressures, especially. And these might reflect in the September CPI data that we are looking at. Okay, so there are three key data that will really stand out in terms of whether the Fed is going to cut the rates, or maybe probably we are going to see a slowdown. So we have the NFP this Friday, and next week we'll be having the inflation data, the PPI, and also the CPI data. Then now we'll be having the Fed meeting, which will be taking place between September 17th and 18th. All right. So in terms of maybe probably if you look at the risk, what you're looking at is in case you are going to have odd job delay cuts, we are going to be bearish for the stocks, and DXY will be bullish. So if tariff escalate, we are going to see USD turning as a safe haven. And in terms of opportunities, we are looking at the broader earnings, especially for the S&P 500. Okay, the S&P 500, the S&P 500, because and the stocks that it tracks. Okay, so looking at some of the key economic data next week that we are anticipating, we are looking especially for the US, key US releases. I don't know why most of the time I usually mostly look at the US. I think it's because I only trade gold. That's what I focus, and therefore my main focus is only what's happening in the US, especially in terms of the economic data. So on Monday it will be a bank holiday because it's Labor Day in the US. So we anticipate less volatility. This is not the time to really look at setups, especially the USD related pairs, because we will be having less volatility because of the Labor Day a holiday in the US. On Tuesday, we'll be having the ISM manufacturing PMI data that is going to come out. All right. So that's what we will be looking at on Tuesday. And on Wednesday, we are going to look at, let me get that calendar here. So on Tuesday is the ISM manufacturing PMI for the dollar. On Wednesday, we are going to look at the job opening. On Thursday, we'll be looking at the ADP non-farm employment change, together with unemployment claims, and also the ISM service PMI. And then now on Friday, that's where we have the major event, or the major data for the week, and that is the non-farm employment change. Okay, so if you look at the projections for the non-employment change, the previous was 73K. So they're anticipating the expected value is 74K, so a slight increase in terms of the non-farm employment change. But again, we have to really wait for the actual. These projections usually give us maybe probably some sentiment in terms of what to anticipate. But again, waiting for the actual data is really very important, so that now we can be able to make a key decision in terms of how to take positions, where the price is going next. All right. So if you look at the earnings calendar next week, also we are looking at September 2nd. We are looking at the NEO, right? That is a major companies that we are looking at is NEO. We are also looking at on September 3rd, we are looking at Dollar Tree, right? We are also looking at apart from the Dollar Tree, which is in consumer spending, and it's expected EPS. We are talking about $0.41, the expected EPS, and we have Massey. We'll be having also Campbell Soup, American Eagle, Salesforce, Salesforce, which is in the cloud and AI sector. That is tech. On September 4th, we'll be looking at Broadcom, which is does the AI chips. We'll be looking at Sienna and also yeah, mostly Sienna. So those are the companies that we are looking at next week. So in summation, in terms of earnings calendar, what we can look at is the sales force, which is expected to have a positive 8% increase in terms of estimated EPS growth. That is here over here. HP Enterprise as well, which is a tech company, we estimated the EPS growth of 5%. Broadcom, which is also in the tech industry, we have the EPS estimated at positive 25% increase. Those are the estimations. And then we have Lululemon, which is a retail company, a company in the retail sector, and where we are looking at about positive 10% increase in the estimated EPS year after year. So as an investor or as a trader, we are looking at maybe probably if you're looking at a bullish case or a bullish scenario, we are talking about maybe 60% probability of having a bullish case, and that is in case you're going to see a soft NFP data right on Friday, and which might now lead to the September cut. And for a bear case, in case you're going to have a hot data, NFP data, or also maybe probably tariff escalate, we might be able to see a delayed cut for the Fed in September, right? So it's always good to diversify your portfolio, especially if you're in the you are doing the investment, especially the stocks industry. It's always good to diversify your portfolio, right? So remember, resilient markets post tariff slump. We might be able to see some resilient markets post tariff slump. Policy lingering along. Because now we are looking at 85% chances of the Fed cutting the interest rates, and also the earnings-led rally expected, because here we are seeing some of majority of the companies here and tech companies which are anticipated to yield better results compared to the previous earnings results. Okay, so it's always good, especially in the financial market, again, to stay data driven, because, or to stay data aware, because data is what really pushes the markets. All right. So with that, make sure to always join my sessions. Every day I usually do Gold Rush daily, whereby we look at the gold outlook. So I will be posting these tomorrow morning, that is on Monday, so that you can be able to plan yourself, especially for the week. Also, don't forget to join our weekly market analysis, which we do every day, Monday to Thursday, 10 a.m. to 11 a.m., courtesy of Scope Markets. So thank you. Remember to stay disciplined. Remember to stay focused, and also trade with purpose.